Good morning, everyone. We will start the morning call. Asian markets are positive except for China, which is down. Yeah, expectation is that SGX will also be higher. I will now hand over the call to the technical team.
Thank you, Jehan. Good morning, all of you. This is Swati. First of all, happy Diwali to all of you. Now coming towards the market session. Today the market is likely to open with on a positive note, and we're likely to witness some sideways momentum during the day. On the Murat trading, we have seen that the Nifty has just quoted a high of 17,800 level, but somehow managed closing below that level, which gives some sort of a cautious sign. But looking towards the today's session, we might face a strong resistance of 17,800 levels on the higher sides. Any move above that level likely to continue this pullback rally towards 17,872 to 17,940 levels on the high side. Whereas on the downside, 17,640, 17,570 are the crucial support we need to keep eye on it. If today Nifty maintains a closing below 17,700, then in the coming trading session, we are likely to witness some profit booking into the Nifty. Coming towards the Nifty Finance, Bank Nifty, as of now, Bank Nifty is showing a very strong chart pattern, and it has just claimed the highs of 41,390 levels and somehow maintained a positive closing above 41,270 levels. Now, as of now, 41,400 is acting as a very strong resistance zone for the Bank Nifty. If it surpasses that level, then 41,540, 41,700 levels are likely to be seen in the coming trading session. Whereas on the downside, 41,100 is the major support level for the Bank Nifty. If today it manages to give a closing above that level, then we are likely to witness 40,700, 40,900 levels on the downsides. Coming towards the Nifty Finance, for today intraday purpose, 17,570, 17,660 are the resistance zone that we need to keep eye on it. Whereas on the downside, 17,380 and 17,270 are the support levels which can be tested if the market is falling down. Coming towards the stock specific, Bajaj Electric looks good on the technical front. It's in the formation of higher tops and higher bottoms, so one can go for a long in Bajaj Electric. Target is 1240. Stop loss can be kept at 1160. Another stocks looks good on the technical front is Torrent Power. Yesterday also we have initiated a buy call during Murat trading as such. The likely target we are looking forward is 510 rupees on higher side. So one can take a buy call in Torrent Power at CMP with a stop loss of 477 for a target of 510. That's it from my end. I request Neerav to take a call for it.
Thank you, Swati. On the derivative front, most importantly, the VIX continues to remain low below the 20 levels and around the 17 odd levels, which is a very good sign because after a long time, such thing has happened for the VIX. very likely, once VIX comes below the 15 levels, you will see a good rally for Nifty going forward. Having said that, in the last couple of days, the open interest has shot up about 15 odd percent for the index, and we are near the expiry, so that is expected. So nothing to worry there. PCR is at comfortable levels as well. FI is also continue to remain sideways. Some days buying, some days selling. Um, One thing here to note is, even though we closed above the 17,500 levels, the futures have closed around the 17,700 levels. The PCR at 17,500 is above one, but the puts haven't really seen a lot of additions at this strike, which is a little worrying sign. The highest open interest amongst puts is at 17,000 levels. That should have come to 17,500 already, which has not come. So we'll wait for another day. But if it doesn't come, the highest put base doesn't shift upwards, that does mean that very likely you will see some sort of selling at the higher levels, which can take Nifty lower and retest its important support areas of 17,500. So the strategy for today should be to book some profits on the upside. There is a resistance at 17,800 odd levels. At that point, book some profits and stay sideways for a bit. From the stock specific front, banking continues to do well. HDFC Bank and ICICI Bank are two banks that we like a lot. Even MCX, after a long time, first it witnessed short covering, and now a lot of longs are being built in into the system. So this particular stock is likely to do very well, even Delta Corp. So there are the B group counters which are now starting to look good, and there can be good stock specific run up for these stocks. So look out for the same. You might get a good run up for the next 5 to 10 days in these stocks. So that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. So there were a lot of banking results on Friday and Saturday. So the one common thing apart from the improvement in asset quality, which we are seeing since last 5-6 quarters, another notable thing since last couple of quarters, last quarter and this quarter, is the expansion in NIMs. So as most of the almost 70 to 80% of the lending by the banks is done on floating rate basis, and which is linked to repo and MCLR. So that transmission of RBI rate hikes has been faster over there, and slowly now on we will see the deposit rates also getting passed on. As one more factor which will help this going forward is the merger of HDFC Limited with HDFC Bank, which will result in HDFC wanting more deposits to bolster the lending balance sheet of HDFC Limited. So there can be a system-wide increase in deposit rates in coming quarters. Although overall we feel that the overall it will benefit the net interest margins of the banks. Probably this we could be very much near the top of the NIM spectrum, and probably there could be some moderation going forward as the deposit rates catch up. On the results front, ICICI Bank result was in line with expectation. On all parameters, the bank did very well. Net interest margin expanded 30 basis points year on year and quarter on quarter, and came at 4.3%. OPEX growth was slightly elevated because the bank continues to invest in technology. Credit cost declined to 0.7%, despite doing higher contingency provisions, which led to ROA of 2.1%. So overall, a very robust set of number, and we are positive on ICICI Bank. Kotak Bank result was above expectation on all counts. Bank continued to press the accelerator. Advances grew 25% year on year and 5% sequentially. Share of unsecured loans increased to 9% versus 6% in June quarter. So aggression continues from Kotak, and even on asset quality on most parameters, it has improved. Slippage was at 1.3% against sequentially 2%. So we are positive on Kotak. CSB Bank result has improved. Slippage ratio was constant at 1%. Credit cost remained negative during the quarter. And with this kind of slippage run rate and exposure to gold loans, we think credit cost even on steady state basis will be lower at around just 50 basis points. Loan growth remains strong at 24%, led by gold loans growing at 48%, non-gold at 9%. We expect gradual acceleration in non-gold book, which will give more confidence to the street, and expect the overall loan book to grow at around 23-24% CAGR over next 3 years. Karur Vysya Bank result was above expectation. The bank witnessed all-round improvement. Slippage came at just 0.8% against management guidance of 1 to 1.5% range. Despite this, the bank provided higher credit cost to shore up the PCR, which now stands at 67%. Accordingly, net NPA declined sharply to 1.4% against 1.9%. We remain positive and retain Karur Vysya Bank as one of our top picks. Jammu and Kashmir Bank result improved across all parameters. Net NPA came at just 2.1% against sequentially 3%, and ROA has expanded from usual level of 40 to 50 basis points to now 70 basis points. Stock is also trading cheap at just 0.5 times the trailing price to adjusted book. So we are positive on J&K Bank, and I think stock can outperform. IDFC First Bank result was above expectation. Wholesale and infra mix continues to reduce, and that will give confidence to investors. ROA also continues to increase every quarter, and it came at 1.1%. And we are positive on IDFC First Bank. Two banks which were lukewarm and kind of inline result and somewhat a mixed bag. So one can avoid those. RBL Bank and Yes Bank. Slight disappointment on the asset quality side. Credit Access Grameen, the NBFC microfinance result was in line with expectation. Although outlook for second half is positive. Credit cost was front loaded in the first half because of COVID and write-offs. But management says that second half credit cost will be lower and return ratios will further improve. ROA was at 4%, so that can further improve, which is a good sign. So we are positive on credit access. Poonawalla FinCorp result was above expectation because of superior asset quality performance. Gross NPA declined from 2.2 to 1.5. Stage 2 also declined sharply. Restructured book also declined. So and there was a provision write back leading to good beat on profit front. So we are positive on Poonawalla FinCorp. In life insurance, HDFC life insurance result was in line with expectation. Margins improved to 28.4% versus normal run rate of 27%. And a similar kind of result was there by SBI Life also, where AP increased. AP was flattish, but VNB margin increased from 29% to 31%. In both the cases, the reason for margin improvement was product mix improvement, where the non-par share is increasing, especially led by the protection. CDSL result has improved. Revenue grew 6% quarter on quarter. Depository revenue grew by 10% quarter on quarter, which was encouraging, and data entry revenue declined 7% quarter on quarter. But the mix of depository is much higher, which led to overall growth. EBITDA grew 8% sequentially, so that was positive, and we are positive on CDSL. Thank you.
Good morning. Birlasoft has posted below expectation numbers for the quarter, majorly on the revenue front, with dollar revenue coming in at 148.8 million versus expectation of 152 million. EBITDA margins came in similar to QOQ, however, higher than expectations. Stock is trading at a PE of 12.9 times FY24 EPS. Root Mobile has posted above expectation numbers both on the revenue and the margin front for the quarter. Stock is trading at 24.9 times FY24 EPS. Thank you.
Yeah, good morning. Ambuja Cement result was below expectation, mainly on account of continued cost pressures. Sales volume stood at 6.74 million ton, in line with expectation. Realization per ton came at rupees 5,446 versus expectation of 5,249. EBITDA per ton came in at 429 versus expectation of 716. Uh, Management of Adani Cement have indicated that ACC plus Ambuja Cement capacity will increase to 140 million ton over the next 5 years from 67.5 million ton at present. The share is trading at EV by EBITDA of 13 times FY24 EBITDA. Hindustan Zinc result was marginally above expectation. Mined metal production came in at 255,000 ton versus 252,000 ton quarter on quarter. Production was driven by better grades and improved mill recoveries. Zinc production came in at 189,000 ton versus 206,000 ton sequentially. EBITDA came in at 4,408 crores versus expectation of 4,215 crores. Margins came in at 52.9% versus expectation of 52.4%. Share is trading at 6 times of EV by EBITDA. JSW Steel result was below expectation. Sales volume came in at 5.7 million ton versus 4.5 million ton sequentially. EBITDA per ton came in at 3,052 versus 9,597 quarter on quarter. Management has maintained its guidance of 24 million ton of sales volume for FY23. EBITDA fell by 83% year on year and 59% sequentially due to fall in steel realization and one-off forex loss of 330 crores and NRV positions of 1100 crores. Realizations have bottomed out and the management expects it to stabilize going forward. Contributions from subsidiaries were subdued. Indian subsidiaries reported negative EBITDA of rupees 48 crores, whereas overseas subsidiaries reported negative EBITDA of 190 crores. Domestic steel prices have bottomed out and are not expected to reduce further owing to the competitive import prices. We are neutral on this company. Thank you.
Good morning. Ramkrishna Forging announced its results. The result has improved. Volumes came in at 32,180 tons versus 30,496 tons sequentially and 28,279 tons on a YY basis. Revenue came in at 824 crores, which grew by almost 18% sequentially and 42% on a YY basis. EBITDA margin came in at 121.8%. The management indicated improvement in performance due to addition of newer products and higher demand for products led to improvement in better utilization of recently added capacities.
Which company, Mahima?
Sorry?
Company name you can repeat,
Sir,
please?
Ramkrishna Forgings.
Yeah, okay.
The company has bagged a long-term supply contract worth 15 million euros, that is around 121 crores, from a Swedish OEM. The supply order is for two components, that is the tie rod arm tag and spring link for an electric vehicle for supplies till 2030. The stock is trading at a PE of 14.8 times TTM EPS. Thank you.
Yeah, apart from this, HUL came up with numbers which were in line with expectations, but comparatively the commentary was not so strong. What the market was expecting, that there will be a good improvement in margins in the coming third quarter, but the management has indicated that apart from palm oil, other raw material prices has not yet corrected, and whatever the reduction in the palm oil prices were there, they had passed it on to the comparable to the finished product like soap and all. So the improvement in margins in the coming quarter seems a bit less, and that's why we feel that the stock may remain sideways to underperform in the near future, and this can have impact on the other FMCG stocks. In these all stocks, Britannia looks comparatively well placed, as there again the raw material is palm oil and wheat and sugar. So all the materials are comparatively better placed. So Britannia comparatively looks better placed in FMCG sector. Apart from that, Phenolics pipe, that is Phenolics industry, came up with the numbers, and numbers were very bad, mainly on account of inventory loss, and also when the PVC prices coming off and the prices of the pipe are coming off, the volume also start declining. So both the things got had impacted Phenolics industries this quarter results. And what we feel that now the PVC prices has bottomed, and now it can remain sideways or can even bit improve also. So that will help drive volume, and there will not be inventory loss and all in the coming quarter. So from going forward from here, these problems will not be there. As such, the prices is also corrected substantially for most of the PVC pipe companies like Phenolics Industry and Supreme Industry and all. So that can benefit in the outlook for the coming period is comparatively positive for these companies. Another small company that is Dreamfolk Services, which got listed recently, and they are basically into launch services. Like they act as a platform for the all the card holders and the airport launch. They act in between them and act as a platform for management of all these launches. So they had declared their Q2 update, which shows that the revenue has grown from last quarter of around 160 crores to around 160 crores to around 169 crores. This will show very substantial high increase in the revenue over year on year, mainly on account of last year same time launches were not working. So there is no meaning in comparing as compared to the last year. But if you see the quarter on quarter, generally Q2 is a soft quarter for them. But they had shown quarter on quarter revenue increase in this quarter from 160 crore to 169 crores. So that shows quite positive trend. We are positive on this stock, and this stock can show easily over 25% growth CAGR for next few years, and which can drive the value and growth as well. So the outlook on Dreamfolk is positive from here. So now hand it over to commodity team from here.
Yeah, thank you, sir. Good morning, everyone. As we have witnessed, dollar index is falling, and we expect commodity prices to rise. So one can initiate a buy in gold around 50,000, 450, 400 levels. However, on upside, 50,000, 650, 50,000, 750 seems to be a resistance area. So profit taking is advisable on higher end. Similarly, silver also can test 58,300 on higher end, and profit taking could be witnessed. So buying on dips is recommended in silver also. Crude oil prices are sustaining about 7,000 support area. So we expect prices to test 71.30, 71.50 on higher end. So buying around 70,000 is expected, is recommended, and we maintain a stop loss of 69.30. Natural gas also, after a sharp decline, we expect prices to pull back. So one can initiate by around 415. Prices are expected to test 440, 445 level on higher end. So one can maintain a stop loss of 400 on lower end. Copper prices should trade in a range bound, but however, one can initiate a buy around 652 levels with a stop loss of 648. Prices can test 655, 57 on higher end. Yeah. Zinc also, we recommend to go long. 273, 270, 250 should be good levels to enter long. One can maintain a stop loss below 270, and prices can test 276, 277 on higher end. That's it from me. I'll ask Ria to take over from you.
Thank you, sir. So on the currency front, the rupee has opened on an appreciative tone at around 82.81 for the October expiry, and we could see it further declining towards 82.27 in today's sessions. You can keep you can keep the resistance or SL at 82.90 for USD INR. For JPY INR, I think there has been an intervention into the USD JPY. However, the statement from the government is still yet to be released. But we saw USD JPY retreating from the levels of 152 towards 148.70 and those levels. So I think you could see the same effect coming into the JPY INR as well. Look for a breakout of 55.40 to go short into the JPY INR for the target of 55.15. I think because most of the intervention was initiated by the government rather than actual money flows, the weakness into the Japanese yen will continue and will only be controlled if any more intervention happens. So it is solely whatever the recovery comes into the Japanese yen will be solely through the government intervention, and they cannot do it for a very long period of time. For the GBP INR, I think the gap up into the GBP INR has happened because of the some positive sentiment coming into the pound recently after the new Prime Minister Sunak has been reinstated there. So I think even if you look at the bonds have fallen from the yields have fallen from the highs to around 3.97 in the from short term to long term tenures, and I think this is a very positive for the pound. If for the GBP INR, look for a breakout of 93.68 to go long for a target of 94.10. You can keep an SL at 93. For the Euro INR, some of the positivity is getting reflected from the pound as well, and the dollar index falling from the highs towards 111 level. And I think it will be more of a sideways consolidation momentum for the Euro INR between the levels of 82.07 to 81.47. For an intraday session, you can look for a breakout of the high 81.75 for going long towards 82, and you can keep an SL at around 81.50. It will be a very short trade, but maintain a very strict SL. So that's all on the currency front. Thank you.